Ding, doo 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 doo, ding, doo 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 doo, ding, doo 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 doo, ding. Hard times. Hello, here's another video of mine. Sorry I haven't done one for quite a while, but I like to do them when I'm in the mood and when I feel like, you know, I've got a concept ready to go, and you know, and this is not how I make my living. So I'm not like most other YouTubers that need to shield coins or sell courses and make money from YouTube, you know, to keep going. Also, you should see that as an advantage, because the information I like to give people in these videos is to empower you rather than try and put a slant on things to try and encourage people to you know, buy something from me or buy into a coin. Here we go, just correct my camera a bit, there we go. Right, so I thought I'd take it back to basics with this video, because I think a lot of YouTubers can gloss over the basics and assume that their viewers know everything, but at the same time they'll tell you to buy into a coin without any real substantial information behind it, which is strange, because at the same time a lot of people that rely on YouTubers also you know, also quite new to the, you know, to trading in general and to the cryptocurrency industry. And all the kind of, they say, you know, the devil is in the detail, and that's certainly the case when it comes to other cryptocurrency advocates and the information they give you. Right, so like I said, this is going to be a bit of a basic one, but I hope there's some people out there that will find this useful. You know, I don't make money from these videos. I'm not selling a course. I'm not going to tell you what coins I'm in so you can buy into them. I'm just here to empower you with more information, and if you find any of this information useful or you make any profit from it and you feel like you'd like to donate, feel free in my coin addresses below. And the topic of the video is market trading signs to look out for. So in this video I'm going to take you through some of the basic signs you should be aware of to know how to react to the cryptocurrency market if you do any sort of trading. I mean, these signs are you know, for beginners, and it's definitely not something I think you should just go away with this information and start trading with straight away, but it's just to give you a quick glance at the kind of information you need to be aware of, really, if you want to take trading seriously, because there's so much to learn from it, and even then all this information is doing is increasing your chances of making a profit from trading. And the only difference between gambling and doing trading is that gambling's completely random, whereas in you know, the stock market and in cryptocurrency especially, you know, there's more educated guesses you can make. So knowing what to look out for and being good at trading just increases your chances of making profit. It doesn't guarantee it. So with that in mind, let's start going through the signs. Starting with the first one, let me know in the comments what ones you've heard and what ones you haven't, or if there's any other ones you think you'd like me to do in another video. Let's start. The first one is Head and Shoulders. No, not the hair shampoo. Head and Shoulders, the pattern to look out for, and one that happens quite a lot, especially in the cryptocurrency space. Now what I'm using is just CoinMarketCap, and I found a few examples of each of these trading signs that we'll be going through, and I've opened up a few tabs that represent each one. And for Head and Shoulders, let's take a look at this one then. Okay, so for the head and shoulders pattern, I'm using the last 7 days of Bitcoin, and I'll be doing that for the rest of the coins because these patterns appear so frequently that there's this, the trading signs are everywhere, which kind of ties into my personal opinion that if you're going to be doing any sort of trading, you need at least, I would say, at least an hour or two a day to keep an eye on the market on and off, to be able to react to it and to effectively at least keep up with the market or beat it over the long term if you get good enough. But even then, I don't recommend day trading because unless you're in the 1%, you're better off just catching a crash, putting as much money in as you can and just investing and then for the long term over the next few years. But you know, this is just for educational purposes more than anything, because I don't personally recommend anyone to be day trading unless you're very confident in your own ability and you have enough money to even make it worth it in the first place, because a few $100 is not going to get you anywhere by trading because the margins are just too small. But anyway, without further ado, let's have a look. So we've got the last 7 days of Bitcoin, and you can see here typically we've got the head and the shoulders. Here we go, head and shoulders. And what that means is when you've got head and shoulders, it most of the time, you know, not the majority of the time, but more often than not, when you have a head and shoulders pattern, the price would tend to go up. So as we can see, that has been the case there with Bitcoin. So now another example of a head and shoulders is the inverted head and shoulders. So here we've got an upside down head. Let's just draw that, the upside down head and the upside down shoulders. And what that means is more likely than not there'll be a drop, and as you can see there's a drop there, and this is using the last 7 days of the Ethereum charts and this is based on you know, the last 7 days of this video being recorded and uploaded. So that's two good examples of a typical head and shoulders and an inverted head and shoulders sign to look for. So you can hopefully time the market and increase your chances of, you know, making a few percent. So something else I'd like to cover that has a similar pattern to head and shoulders, but can sometimes mean something different is going to happen, is called testing. And this is what happens when you're at or near an all-time high. So see here with Ethereum, here typically when the price is testing, it will peak or dip a few times before it will either start to accumulate and go up or start going down. So here with the head and shoulders, the general gist here is that you can see that even though there's a general head and shoulders trend, that actually it was testing several times here, several times. And you know, if your money's in at that point, then you've got to keep your eye on it throughout the entire testing period so that you can react to the subsequent down or upturn in it. Okay, so the next popular trading sign to look out for is the cup and handle. And this means, unlike the head and shoulders, depending on its if it's inverted or not, which means it can go up or down, the cup and handle means that breakout is imminent, and that breakout can be higher or lower. So this sign is not as useful in terms of knowing if something will go up or down, but it is useful to know whether you think you should cash out or not, because it could go down as well as up. It literally just means there's a breakout and there's likely to be a big change. To improve your chances of knowing after a cup and handle if it's going to go up or down is keeping your eye on the news onto general market sentiment, so browsing Reddit and other forums and the Bitcoin magazines online to see what the kind of sentiment is. So after that cup and handle, you've got a good idea whether you think it's going to go up or down. Bad news, after the breakout it will go down, obviously. So here with the Ethereum classic charts over the last 7 days, here we can see cup, here we go, here we can see a cup, and it kind of juts along and then up. So typically it would do the bow shape and kind of jut a bit, and then at some point it will go up or down, and in that instance it went up. And it can likely go down, so either way. So all the cup and handle does is give you a sign that there's some sort of breakout happening. Right, for my next trading sign I'd like to cover is called a VIX, and I'm going to be using the infamous chain coin for this. So here you can see back in May there was a little blip, little blippity blippity blip, doink, and then almost a little one after that again. And that's when typically there'll be investors testing the market and moving money into this coin or market. So here there'll be the first investors, and what they'll be doing is putting the money in, not the whole amount necessarily, but enough to see if there's any reaction or response, anyone that's going to cash out at that point or scalp them. And so basically they can buy the money in, and if the market cap and its price changes accordingly, then they know they can then keep the coin most likely at that price until they decide to unleash it on the world and get that pump and dump in. So here there was two little VIXs. So the first one is probably the people, the original person and a few very close friends, and then the rest is the next VIX or two is usually subscribers of a group or a Slack or a Discord, and then the pump, where all the people aiming to profit as pre-bought in, and then the pump that happens by the general public. So Chaincoin is not only a great example of a pump and dump, but also it gives the signs away before it's happening that somehow there's going to be some manipulation happening beforehand. And VIXs are a good way to see if there's people ready to test the market and do potential manipulation. So for my last trading sign I'd like to take you people through is the bowl or the dovetail sign. This is when usually a coin has pumped or it's seen a lot of growth lately, and then it will dip, and if the dips are sharp and the rises are sharp, then that means that the coin hasn't really settled yet, and that's usually a risky time to buy in. But what you need to wait for is the bowl or dovetail sign. So looking at Lisk over the last 7 days, you can see there's a general dovetail here over the few days where it goes like that. So a dovetail like that means it's in accumulation phase. Its price, its value is settling, it's being tested. Potentially people are accumulating, and so while it goes down, it's accumulating, the support is sometimes tested, and then that's a natural decrease. And with a natural decrease showing with a curve like that, it's a good sign that there's going to be a nice reliable increase going forwards. So if a coin is pumped, never get in during a pump or when peaks and dips are erratic, unless you can keep your eye on it every minute of the day. What you want to do is wait for the dovetail and the accumulation to start, and then make a good entry point, and then just leave the money in there until you're happy with your gains. Okay everyone, I mean those were my basic market trading signs to look out for. I mean obviously there's so many of them, and you know a lot of them are just memes, and just some of them are you know don't really help things at all. And so the ones I've gone through with you today are the ones I kind of just use most of the time as a general idea of when to invest or when to cash in on that or out. I mean, what I will say is these signs can happen on any particular time period. So it can happen multiple times during the day. You can see it over the span of a week or a month even. So knowing when to zoom in and out of a chart is quite important, because you could be zoomed into the chart on a 7 days and think there's a dovetail happening when really you're still at the peak, as can easily happen with Bitcoin. At the moment Bitcoin is around $7.4 thousand, and it's still at a peak, whereas if you looked at it over the last month or 3 months even, it would probably not look too bad and quite stable. But over a year zoom out of the graph, you can see we're at a peak definitely. So there is quite a good chance that, for example, Bitcoin will correct to some degree. So at the moment it's at 7.4k. There might be a strong support now at 7k, but I wouldn't be surprised if it starts going down to 6k and testing that support as well. Because when you zoom out to the last 3 months or year, you can see we're definitely at the top of a peak at the moment. Whereas zoomed into the last month or week could mislead you into thinking we're in some sort of dovetail or accumulation phase. And as the acronym in the middle stands for, this is DYOR, and that stands for do your own research. These signs are not something to take gospel. They're just very basic indications to improve your chances of trading successfully during the day. And as usual, don't invest more money than you can afford to lose. This is not necessarily financial advice. This isn't financial advice at all. This is just for educational purposes and to try and empower you and increase your confidence in when investing in the cryptocurrency landscape. Okay, I hope you found this useful, and yet again, if any of this you found valuable, leave a like, and if any of you are feeling generous, then feel free to donate to any my addresses below. There's a Bitcoin, Ethereum and Litecoin one. Okay, thanks for watching. Until next time.